Hello, everybody. So today I want to talk about Grab, about the fourth quarter, and quite frankly, I loved it. I think it's fine. I think it's business as usual. But the market is upset, and the market is specifically upset about the incentives, just another way to say marketing spend. They're saying that this company is spending too much in incentives compared to the rate of growth. That's a very narrow view. That's a very short-term view, saying, oh, look, they increased incentives, by on average 25%, and the growth, grew by 20%. So they're losing out here on the growth. And this is a classic Wall Street way of thinking. It's so classic. Back in the early days, Amazon was not understood because Amazon was spending a lot of money in marketing, and nobody understood Amazon, and we were calling it like the most overvalued company for the longest time until it took over the market and became what resembled a monopoly. You may remember when Hims was criticized for spending too much money on customer acquisition. Wall Street wants profits today, and that's why Wall Street doesn't like this. But for me, I look at the business and I'm like, okay, we're trying to become the number one in Southeast Asia, and how are you going to do that if you don't spend on marketing? How are you going to build a two-sided consumer platform if you don't spend on partner incentives and on consumer incentives to build this platform to 20x the number of customers in Southeast Asia, which is the goal of the CEO? You can only do that by recruiting new partners to join, new drivers, at the same time as you recruit new consumers. And that's why these incentives are so high, because otherwise you're not going to get people to download the app and do their first transactions. And there's a lot of dead zones. There's a lot of zones where Grab is not present yet. Like I said, they could grow 20 times. Only 1 in 20 customers in Southeast Asia potentially is using the product. Only 1 in 20 people who could use the product. So profits today is definitely not how monopolies are created. You may remember when Sea Limited fell to the pleas of Wall Street. Wall Street was complaining about Sea Limited investing in growth, and they pivoted. They went back to profits. I didn't like that move. And then Wall Street gave them no benefit whatsoever for focusing on profits, and then they decided to invest back into the growth. That was the case of Sea Limited. I'm happy to not see Grab fall for it. I'm happy to not see Grab just saying, okay, we're going to stop investing in the core business and we're just going to focus on profits. Now, Grab's incentive payments are an investment in the growth, in the future growth. And I see a lot of people discuss the competition, but I never hear names about the competition. And when you read online, you have outdated articles here and there talking about Lyft or talking about Didi. Well, first of all, Lyft, of course, is not in Southeast Asia. Talking about Uber. Well, Uber sold its division in Southeast Asia. They sold it in 2018. I was in Southeast Asia last week. If you open the Grab app, the Uber app, it redirects you to Grab. If you open the Uber app, you're being redirected to Grab. Uber does not operate in Southeast Asia anymore. Now, you may think of Didi, the Chinese ride-hailing app. Didi does not have a significant presence in Southeast Asia. They decided to focus on China, a little bit on Latin America, but Didi is not present in Southeast Asia. So who do we have left in Southeast Asia? Well, we have Gojek. Gojek is mostly in Indonesia, a little bit in Singapore, but Gojek is the main competitor. And frankly, when I look at Gojek, it's like literally the same marketing. I mean, down to the screen, the same green, the same shirts. Everybody on a scooter wears either a Gojek or a Grab shirt. Sometimes you'll have a Grab picking you up and it's someone wearing a Gojek shirt. Gojek is the competitor, and Gojek, granted, is a 40% competitor in Indonesia. Grab has 52% market share in Indonesia. But if you look at the other markets, Gojek is nowhere near of a formidable competitor to Grab. Grab is nearing a monopoly position, except maybe in Indonesia, where it has Gojek as a competitor, but a lot of people use Grab because it accepts credit cards and things like that, which Gojek doesn't do. Gojek is like a top-up system. Anyways, and maybe you have a little competition on the food delivery space. I know Shopee does a little bit of that. I know in some countries you have Food Panda, which is a spin-off, not a spin-off, but a subsidiary of Deliveroo, a German company. But even then, I don't think that casts a shadow over the near monopoly of Grab. Grab is the leader. If you look at this data, Grab is the leader. And so it's important to point out the competition. Where is the competition? Also, talking about Gojek being the competition, have you seen these rumors the past few weeks about the merger, the Gojek Grab merger? And if you're on the ground, you would see that these companies are very similar. A merger would entirely make sense, especially when Tokopedia was partially acquired by TikTok over there. And so I don't really understand all of the dynamics or how this works. But if they want to grow a giant over there, I don't have a problem imagining a potential merger. Reuters seems to agree with me. Of course, they denied it. Grab denied talks, and they would always deny talks until they make it public. But if you look at the performance of Grab has actually been much better than the performance of Gojek. Grab has recovered much better than Gojek. So anyways, so what's the competition? Well, I guess the competition is the driver who's doing it outside of the Grab or the Gojek system. It's the driver who just talks to you on the street and say, want to ride? Want to ride? Want to ride? And you negotiate cash. The competition is cash. That's what the competition is for Grab. People just talking to the driver on the street and paying cash. And so even if Gojek and Grab remain separate entities, I don't see a lot of investors worry about Uber versus Lyft in the US, because Uber and Lyft may have been fierce competitors 5 years ago, but now Uber took over, and now Uber is the absolute leader. The market is big enough for two, but there's going to be a winner, and it seems to me like gravity works in certain ways. It seems to me like Grab is becoming that leader. If someone must invest in rideshare, I think Grab has a key advantage, and Uber doesn't necessarily have that advantage. In the US, Uber is going to have to compete with Tesla. They're going to have to compete with robotaxis from Tesla and perhaps Waymo. In Southeast Asia, I don't think this is coming anytime soon. This is maybe coming in Southeast Asia 5 years after it comes to the USA. FSD will be much harder to achieve in Southeast Asia. The roads are much more complex to understand. And so that's point number one. I see no immediate threat for Grab, while I do see an immediate threat for Uber. And the point number two is Grab hopes to become a super app, in which case, if you become a super app, then you would remove a lot of that risk. And you may remember the chatter about Uber trying to buy Expedia to move towards a super app. But Grab has a specific plan about the super app. You can go on their website, type Grab super app, creating the super app. They're talking about bill payment. They're talking about borrowing money. If you're in Indonesia, you can see a lot of restaurants have a big Grab logo next to it when you drive by. They have a big Grab logo to let people know you can order my food on Grab. They even have this thing called Grab Pay, where you can pay with a Grab app. So they are well on their way to become a super app. Now, who knows whether it's going to work out or not, but they are on their way to do that. So, valuation. Let's talk about valuation. So again, if you must be in this sector, which Wall Street loves this sector, they love two-sided platforms. They love networks. In my view, if someone must be in the sector of rideshare, in the sector of networks, two-sided transportation networks, in my view, Grab is the better play. Didi. A lot of investors eliminate Didi because it's a Chinese company, even though Didi looks the cheapest, they eliminate it. Uber, to me, it's a great company if Tesla didn't exist. But because Tesla didn't exist, I think Uber is going to be in trouble. And even if it's not true that Uber will be in trouble, the narrative will hurt the stock. That's my point number two. Point number three, Lyft, right? I don't invest in number two companies. Lyft, to me, doesn't have a dominating position anymore. They have a secondary position, so I would stay out of that. DoorDash, I think it's too specific. Focusing on just food delivery, I think is too specific. Grab, to me, when I look at the number, it seems like the most interesting play. They're predicted to grow revenue with guidance. We have guidance on this, and we know they're setting themselves up to beat on raise, so maybe they'll do 30% actually, not 22%. That's why I put 22% in my forward revenue growth because of their guidance, but maybe they'll beat that handsomely as they have a history of doing. But they're going 22%, so almost the fastest growth out there, and my guess is they'll beat DoorDash as far as growth rate goes. The gross margin is what it is, but we don't focus on profitability. The marketing would not impact gross margin, but it's on the higher end. EBITDA margin is the highest actually on this number here at 11%. It's higher than any other one in the space, so it's the most profitable company in the space. Gross margin will tend to go up, perhaps as incentives stop being paid out. And again, the enterprise value over gross profit over revenue growth is 0.57. So not cheap by any means, but not very expensive either. And they have a highest rule of 40 out of 33. So once again, if you must be in that sector, which is the first question you need to answer, do I have to be invested in that sector? If someone must be invested in that sector, in my view, that is the better play in this sector. And look at how operating leverage is planned to kick in for Grab, because they're predicting growth of 50% in adjusted EBITDA versus revenue growth being only up 22% is what they're predicting to 2025. So that's a clear sign of operating leverage. This business is gaining traction. In summary, don't nitpick. If you believe in this company, I would not nitpick. They could become a giant. This was not financial advice, not investment advice. This is just entertainment. Hoping you were entertained. Please like, please subscribe. Thank you for watching. Follow me on Patreon, follow me on X. Have a wonderful, wonderful day.